Hi, this is Elizabeth Dawson, and you're listening to Successful Retirement Tips. So, what are some of the tips that we want to talk about today? I think this is very relevant because we've had so much volatility in the stock market these past 2 weeks. This could be continuing for more time to come. What we do know is that with these types of indications that we're probably going to have somewhat of a market correction that's going to be fairly large. So when you want to think about retirement and you want to be successful in that retirement, you have to really be conscious of what your losses look like from the past so that you have some indicators of what they could be when the next market correction comes. So remember 2008, we can't forget that. A lot of people forgot about 2000, 2001, and 2002. So in 2000, it was the dot-com bubble. We kind of have a lot of that with, all the social media and all those things right now. We had, in 2001, we had 9/11, which was a horrific disaster. And then in 2002, it's what they called corporate corruption. So Arthur Andersen, WorldCom, where all these companies were selling the company stock, and that was what was all in their retirement plans for their employees. And they lost that, and that was devastating. So there's been a lot more rules that have come together to protect people in their retirement plans. So now we had 2008. Kind of started in 2007, a little rocky, and finalized, in March of 2009. But that maximum drawdown, people really couldn't even stomach. They just couldn't even conceive of it, right? So the Dow Jones went down by over 50%. The S&P 500, which is where most people want to watch that because it's the top 500 companies within the United States economy. That's what people are watching, and most money managers are trying to beat it. That was down by 50.97% at its worst point of its worst drop. Now, by the end of the year, it came up to 37%, but the average consumer, what did they do? When it went down to that 50% plus, they got out. And in most situations, when we do a risk analysis for our clients, they see that their risk might have been worse than that 50%. Their maximum drawdown might have been 55, 60. I've seen it as high as 80%. So we look at a topic called losses hurt you more than gains help you. So when you're basically thinking about retirement, and maybe it's this year, maybe it's within 2 years, 3 years, 5 years, even 10 years, can you wait for the market to come back up if you stayed in those investments? Can you wait 10, 12, 13, 14 years for that investment to recover? Because so many different things start to occur when you go into retirement, because money acts completely different in retirement distribution than it does in the accumulation phase. So think about this, and I kind of draw my arm out there, right? So if you have $100,000 and you had a 50% drop, boom, well, you just lost $50,000. What do you think you have to have as a rate of return to recover that? All at once. You'd have to have a 100% rate of return just to get to flat. Well, think about this. If you're at $100,000 and you're starting to take, let's say, $25,000 out per year, it's going to go pretty quick. Let's even just shrink it down to maybe $10,000, so 10% per year, which I don't recommend. We talk about something called the safe withdrawal rate, and that's about 2.18%. It's kind of whatever the Treasury is giving us, right? So if I have $100,000 and I'm even taking out 2.18%, think about this. So let's just say it's $2,200 that we're taking out. Well, if I'm taking out $2,200 per year to supplement my retirement, guess what starts to happen? If I have a major drop, can I still sustain taking out that $2,200? Probably not. I'm probably going to modify my income in retirement. So this is where we want to give you those financial tips for a relaxing retirement and an enjoyable retirement. We want you to have peace of mind. So I encourage each and every one of you out there to call in, and we'll work with you and do a investment risk analysis. And that risk analysis is going to tell us exactly what you're kind of looking at in the unforeseeable future here when the market does take another correction. Because if you think it's going to happen, you got to do something about it. And when is the best time to do something about it? Right now. So don't procrastinate. This is a very serious topic. So again, give us a call at 619-640-2622. We want you to have a very successful retirement, and we don't want you to have to wait or even modify your retirement income. We want you to be able to sustain it for the rest of your life. All right, stay tuned for next week's show again. More successful retirement tips to come. The information provided in this show is for informational and educational purposes only. This show is not investment advice, nor is it intended to address the financial needs of any particular viewer. The opinions expressed on this show are not intended to be an endorsement of any particular investment strategy or service of any other kind. You must make an independent decision regarding investments or strategies mentioned throughout the show. Before acting on information in this show, you should consider whether it is suitable for your particular situation and strongly consider seeking advice from a financial advisor.